I'm Sophie Saunders, and today you'll learn about adjusting journal entries. You'll learn the definition, the 4 scenarios and classifications, and some simple examples to help you further understand. Adjusting journal entries are used by accounting information systems to ensure revenues and expenses are properly recorded in the general journal under an accrual basis. The classifications of scenarios are: when the cash is received before the revenue, a deferred revenue is earned. If cash is received after revenue, the accrued revenue is earned. If cash is paid before the expenses, a deferred expense is incurred. If cash is paid after an expense, an accrued expense is incurred. Classification 1. Cash is received before revenue. Say you were to receive $200 cash on Thursday before you weed the garden bed for your mum on the weekend. You would write this as follows in the general journal. You debit the cash and credit the unearned revenue as the liability is increasing. However, after you receive cash on the weekend, you then write this on the adjusting journal entry as the opposite of the general journal, as the task has taken place. You debit the unearned revenue, decreasing the liability as you have now finished the garden bed, and you credit the cash. Classification 2. Cash is received after revenue. Under this classification, your mum asks you to weed the garden bed on Thursday and will pay you the $200 for your service on the weekend. You complete the service and then you are paid. In the adjusting journal entry, you would write as follows. The debit account receivable, as you are still yet to receive the $200, and you credit the gardening service revenue of $200 as your accounting for the service you have done. Classification 3. Cash is paid before the expense. Suppose you buy a car on the 1st of January for $40,000. This transaction would be recorded into the accounting system as follows. You are now preparing financial statements on the 31st of January and have used the car for a month. You should record the sum amount of expense associated with the use of the car. This month's expense is $1,500 and was recorded as follows in the adjusting journal entry on the 31st of Jan. You debit the depreciation expense and credit the accumulated depreciation expense. The accumulated depreciation expense amount is a contra asset, as it is only a section of the car account to therefore yield the net balance of the asset. Classification 4. Cash paid after expense. Now imagine a company pays their employees $2,000 every month. This expense is to be recorded in the period it incurred. The company must record the $2,000 of expense. They would do this by debiting the salaries expense and crediting salaries payable. When the company finally pays their employees, the following entry must be made. You debit the salaries payable and credit the cash, therefore decreasing the cash account.